People are freaking out about President Trump's 50-year mortgages, but the real story might surprise you. I've helped millions improve their finances, and I'll reveal the hidden benefits everyone else is missing. Who knows, a 50-year mortgage might just be right for you. Here's one of the biggest benefits. A 50-year mortgage spreads out payments over much longer, so your monthly payments will be lower, helping your cash flow. What's more, the lower payments could also help you purchase a home when you otherwise couldn't. If your choice is between a 50-year mortgage and renting forever, you're starting to build some equity with the 50-year mortgage, even if it's slow. The lower monthly payment could also work if you expect your income to rise significantly in the future. Maybe you're a recent graduate with high earning potential. You could start with the 50-year payment and refinance to a shorter term later when you can afford higher payments. And then there's the psychological factor. Some people would prefer having lower required payments even though they plan to pay significantly more every month toward the principal. The 50-year mortgage gives you that flexibility. Here's where things take a sharp turn. By the way, if this video is helping you, please like and subscribe. It helps people find practical money management tips like these. Let's say you're buying a $400,000 home with 20% down, so you're financing $320,000. With a 30-year mortgage at 6.25% interest, your monthly payment is about $1,970. Over 30 years, you'll pay roughly $390,000 in interest. That means your house actually costs you $790,000 total. Now here's the 50-year version. Your monthly payment drops by $225. But you know what's crazy? You'll pay about $725,000 in interest over the 50 years. So your total cost jumps to $1.13 million for the same house. You're saving $225 a month, but paying an extra $335,000 over the life of the loan. That's almost as much as the original price of the house. But wait, there's another catch. 50-year mortgages would likely carry higher interest rates, making the situation worse by reducing monthly savings and significantly increasing the total interest you pay. But this is just the beginning. One of the biggest benefits of homeownership is building equity in your home. With a 30-year loan on the same $400,000 house, you'd pay down about $52,000 of principal after 10 years. You would own a meaningful chunk of your house. But with a 50-year loan, you'd only pay down $14,000. You'd be building equity way slower. Here's another reality check. The average American homeowner moves every 12 years. With a 30-year loan, you'd have built meaningful equity if you sold after 12 years, but with a 50-year loan, you'd have barely made a dent in the principal. If home prices stay flat or drop slightly, you could end up underwater, owing more than the house is actually worth. Let's say you're 35 years old buying your first home. With a 30-year mortgage, you'll own your home free and clear at 65, right when you might want to retire. But with a 50-year mortgage, you're making payments until you're 85. Think about that. You could be on Social Security and still paying a mortgage. And here's the twist you didn't see coming. More buyers qualifying for loans without more houses being built means one thing: higher home prices. So your savings from lower payments could get eaten up by sellers raising prices because they know there's more demand. I know what you're thinking. With so many downsides, does a 50-year mortgage even make sense? Yes, for a very specific type of buyer. It's right for you if you're someone who absolutely cannot qualify for a 30-year loan but has stable income. You plan to pay extra toward principal but don't want to get locked into high monthly payments. You're disciplined enough to refinance when your income increases. You're buying in a market where renting costs more than the mortgage payment. For everyone else, stick with the 30-year loan. Whether you're taking out a 50 or 30-year mortgage, a solid credit score can save you tens of thousands of dollars. Watch this video for 5 essential moves to raise your credit score fast.